Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, February 11th, 2026. It's 10:20 a.m. Eastern Time as I'm starting the video. I am back at my desk. I was out yesterday. That's kind of why I was thinking it was Tuesday. Out of town. Believe I've answered any questions. I went through the last couple of posts. If you asked a question or a chart update request or anything going back a couple days and I missed it, just repost it under the this post or any of the recent posts. All right, let's dive into the charts. Economic calendar. Let's start there. We had today is we had the employment situation report. Well, let's start with yesterday since I was out. Retail sales. Retail sales were flat. A consensus zero point 0.4 increase of zero point 0.4 came in flat, just pretty much across the board. You can see, I think you can see. I'll zoom in for you. Donuts across the board. In retail, consumer spending, as most of you are probably aware, accounts for, I've heard, anywhere from 2/3 to 70% of GDP. So what that means is the government can spend all they want, stimulate all they want, and it can't offset any impact in consumer spending. So that was, again, it's month to month. You want to look at moving. This is not the moving average down here. You can get on the economic calendar. I'll get to that in a second. I'll show you a couple of them that I have here. And I guess they're still putting this up here. I guess the government shutdown kind of skewed and made some of the numbers wonky. Either way, let's move on. So that was yesterday while I was out. You had the employment cost index. You can always access these. Go to the website. Go to resources at the top menu of the site, and then down here to economic calendar right there. And when you want to get a little granular, the one I'm on, the one that I just showed you a minute ago, is Econoday. I kind of like that one for a quick glance, but then you can get a little more granular when you come down to the thisinvesting.com, because if you click on one like ADP, here, core retail sales, you go there, it's going to give you, you can click on the full event you can get the chart from this one right here. And you can put that in any format you want, line chart or whatever. So, all right, that's yesterday. Go back to today. Click on economic calendar. Let's go back to Econoday here, and employment situation. And they're ranked, by the way, guys. The red stars are the big market movers right there. So we had the employment situation today. Blew the cover cover off the ball. They were expecting 70,000 new month over month on non-farm payrolls. Came in hot at 130. So from a and I'm going to speak to this. This is why I'm going through these numbers from an economic perspective. That's bullish, but this market is a complete addict. How a heroin addict has to get his fix. This market is addicted to low interest rates. So what happens is sometimes good economic news, strong economic news, especially on the employment front, decreases the chance of further rate cuts, right? Simple stuff. So then the market can throw a fit. It was funny because it ripped initially on it and it's been selling off since the open. Unemployment rate consensus was for 4.4%. Came in cooler than expected. Again, bullish for the economy, not so good for those wanting more rate cuts. Private payrolls consensus was 75,000. Blew it away at 172,000. And again, you can go over the numbers yourself. So that's what moved the futures this morning, and this brings us to where we are now. And then when you go again to the Econoday calendar, you can see tomorrow, or either one, you can see we have jobless claims tomorrow, as well as existing housing sales, and then followed by the CPI on Friday. So that's what the calendar looks like this week. Okay, let's get into the chart. So yesterday was a good day for me to take off because it was pretty much a non-event. This is QQQ. This is where I left you right here on Monday. We were back testing the midpoint of the range, 614, which I said would be an objective short entry because that midpoint of the range line right there is defined. It helps define support and resistance. When you're in the larger range right here, You tend to spend time at the bottom. The midpoint range acts as resistance, and resistance, once taken out, then becomes support. So when you gap above, or when you move above it, you tend to go to the top of the range. And it's not perfect, but you can see it does a pretty good job. You have a period of, trading under there, pop, 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 resistance. You broke out right there, went up close to the top, came out a one-day wonder, but you staved it right back on the midpoint there. Remember, a daily chart, you look at these candles and they can tell you whether they close at the top or the bottom. And then that's it. So we remained we've been flirting in the top of the range. We recently broke down, and this is a back test, as was, Monday, Tuesday, and so far today. We started out today, and so far rejected. The day is very young, so let's get to the bigger picture. Remember, in pre-market, we had a perfect tag the other day where I favored a reaction off there at the bottom of the trading range. It's not shown here because this is only regular session candles. So we did have, as expected, I've told you all along, my expectation would be, a move down on that most recent divergent high, down to and ultimately below the range. So we hit the bottom, one last, what I believe to be, and said at the time, one last hurrah off there. And again, whether or not, my prediction or analysis on where we go pans out or not, I can tell you with strong convictions, support is support until unless broken. So you got to break 589. And if you pop and get a solid move back up here, especially a daily close above 614, then that is going to increase the odds. It doesn't guarantee anything. It just increases the odds are going to go to the top of the range. And then, as I've said before, we'll still have the divergence, any move to the top or even a breakout above followed by a reversal. That's just going to be a marginal new high, and that would be what I think is going to happen. Until then, guys, again, and I've said this often, especially if you're new to the site, if you're frustrated, if you've had a tough time trading in the last few months, it's because you're probably trading the stock market. And, unless you're a very active, skilled day trader or very short-term swing trader, and you can swing these rips and dips, and I posted a couple of those trades for you recently, the market's gone nowhere. Your 401k has gone nowhere. Your Vanguard index fund has gone nowhere. Your QQQ has gone nowhere. It's gone a little up, a little down. So that's just recognize it for what it is, I keep saying. And then ultimately, these trading ranges will resolve in one direction or the other. And typically, you're going to get a pretty, generally, you get an explosive move coming out of it. That's the way I think we go, because it's, like I said, it's similar to energy building, like a coiled spring. And once that spring, pops, you could get a big move. So we'll see. Can go either way. And that's it. Have a plan for whichever direction it goes, and then react. And most importantly, get ready to react fast if that happens in that fashion. It doesn't guarantee we're going to have an explosive move out of the range, but that's still what I favor. So break of 589, then a break of the 200s should take you down to my next target, T2 in short order. And again, I want to reiterate, we have vastly outperformed. The trade ideas for the last several quarters have blown away that, well, there's really it's not a hard bar to beat, but individual stock picking has blown away the market. The market's gone nowhere but sideways. Even the S&P 500. The S&P 500's outperformed the NASDAQ 100 by a little bit, but same story, still within a big multi-month sloppy, choppy trading range. And unlike the NASDAQ 100, the S&P is at the upper half above my midpoint line at about 673.80, and so that puts it in a little bit better, position, and therefore he has to, in my opinion, temper any bearishness unless you see the S&P break that level, and then the bottom of the range, which, again, if you forget, it's very simple. The October 10th lows. I've been harping on them since they were put in. Very important levels. It was the first targets hit on QQQ on the daily chart swing trade. So, all right, that's it. I know a lot of that is redundant if you've been following me, but these are the developments or lack thereof in the markets that they cover. All right, let's get into the Mag 8. We're going to move on. I want to cover Bitcoin and strategy as well. I had a good question put to me that I responded to today. The question I didn't get it till I left town or after I returned back. All right, so QQQ, we're going to go through the market leaders. NVIDIA, I know this is a busy board. I'm going to clean it up for you real quick, show you what was on the key things that I have on this chart right here, and that is this multi-month. You talk about the market being in a multi-month trading range. Here, I missed the box. Hold on, let me get it right. Okay, I picked the wrong tool. Gotta go here, just hand drawing it for you and showing you this is the story of NVIDIA for months now. Going back to really early July, the beginning of July last year. It's been in this trading range with one failed breakout attempt to new highs, back down to in the bottom of the range. Again, I'm just hand drawing it here. More recently, the bottom of the range comes in right about here, about 170. You can see when I turn on all my lines, I know it gets a little busy. That's why I show you the clean version. But this right here, about 171, 172 is the bottom of the most. That's where the stock's been grabbing support. There's also that trend line I gave you right there. And then the key 200-day moving averages. Let's not forget that's that. And they're going to report. The clock is continuing to tick. I told you they're an outlier of the Mag 8. They report way out there on February 25th. The rest are out of the way. We're going to go over those real quick. And so based on my read on this daily chart, even though we're in a trading range, but the weekly chart as well, yeah, I do expect we do have that head and shoulder potential head and shoulders pattern. Left shoulder, head, right shoulder. It's been fully formed now. You have a neckline, and that neckline comes in with the 200s. If we break this level, and again, I don't know if it will happen. I don't know if it'll happen pre-earnings or post-earnings. If it does break, and we keep this, symmetry, and you can have two right shoulders, by the way, or two left shoulders. You can have one on either side. You can have two on either side. You can have two on both sides. That's called a complex head and shoulders pattern when you have multiple shoulders. No problem to have that. And again, we don't have to have that pattern. What I can tell you, it's a confluence support, trend line support, the key 200-day moving averages. So if and when it breaks, it should be a very powerful technical catalyst that takes us down in short order. There's my, the measured target and my first target on this chart, about 134. We'll call it 133.60, and that would almost certainly, I should say, as much with as much degree of as high a degree of certainty, excuse me, as I can give you, that will take the market down with it, due to both its mathematical weighting on the indexes being the largest component of the S&P 500 and NASDAQ, as well as the psychological importance being the king of the AI bubble. All right, so that's that. NVIDIA, again, going to report. All I can tell you right now, it's at resistance. That's I go over these videos, I can tell you, just like QQQ, I'm trying to hand draw it here. I'm having a tough time today, guys. There it is. That's resistance. You can see it was resistance here. Other than this false breakout, once it failed, it was resistance. And so NVIDIA is an objective short there if you want to take a shot. Again, it's going to be noise. They're just within a few weeks of reporting. So it's not my favorite trade, not a trade I'm taking. I'm just watching it more for the market. Just want to point it out. So at resistance, if it pops that level, again, you have to take a breakout we're only a couple weeks. Now we're about 2 weeks away from earnings. You have to take that with a big grain of salt, right? Because breakouts that occur right in front of earnings have a much higher failure rate. They mean very little to me, so there it is. Let's not spend much more time on the video. We'll watch it. Apple, as I mentioned, back to the this level. I have resistance about 278 right there. Broke the minor trend line. I mentioned Apple is a potential short. Again, just not my cup of tea. When I have a strong degree of confidence, like you did back here, I give you 3 price targets. We shorted it there. Hit the last of the targets, told you could cover it for a bounce off T3 in the 200s. It's just kind of noise right now. And again, it's indicative of this being in this trading range. So I'll point out objective levels. And if you care to trade these things, I'm watching them more collectively to get clues on where the market's going to go. We're going to break out and power through and put in, take out the old highs in the NASDAQ 100 and put in new highs. Well, we need to see NVIDIA pop above that trading range. We need to see Apple break out to new highs. It's not far from it. And we need to see Google undo this. This was a big check mark for me, as you know. We had this uptrend line right here. broken down pre-earnings, back tested, but post-earnings rejection, and we're well below the trend line, so that keeps this one on a sell signal. However, we hit, and we're still at my first price target, 313.78, which is also the 50-day moving average, that yellow line there. So we just need to get down here. Really, to keep it simple, if we take out the lows from this candle right here, that was a day after they reported, February 5th lows, especially a daily close below there, that's going to put us comfortably below that 313.78 support and the 50, increasing the odds that we're going to hit my next target and or targets. And I haven't waffled. I still maintain a final target, near-term target is really what I call it, swing target, if you will, multi-week, multi-month, down to the 200-day moving averages and this uptrend line here somewhere in there. So nothing's changed there. However, if the NASDAQ 100 breaks out, NVIDIA breaks out, QQQ could easily go on to make another new high. It'll still be a marginal new high. We'll just have to assess the charts at the time if that happens. So again, watch these levels. Microsoft, there's the primary uptrend line. I've been covering this one quite a bit. It just recently broke below the purple primary uptrend line. It's been back testing it. We're below it at the moment, but not by a lot. So this is a breakdown, a back test, and I've laid out there that XSW software ETF, which this one's obviously a big component of. If you want a hedging trade idea or a pure play, if you're more bullish on the markets than I am right now, absolutely a pure play, meaning you don't need have to have a short in the NASDAQ 100. And again, the NASDAQ 100 short's been boring me lately. It's, most of my money, my profits have been made off individual stocks, long and short, different sectors, then, factor in commodities and other things like that. Again, I say that, the old saying, I didn't make it up, but you could can't squeeze water from a rock or blood from a stone. And you can't, extract, unless you're a very, very nimble, active trader and doing a lot of day trades, you can't extract much from a sideways market, in the stock market. However, but you can do it. You can't, unless you're trading the indexes, that is. If you're trading individual stocks, it's been super easy. I'm not going to say this is the biggest divergence that I've seen, not divergence, but sector rotation that I've seen in years, because I've seen some similar, but it is one of the biggest. In other words, what I'm trying to say, there's tremendous profits to be made swing trading. You don't even have to be an active trader. You don't even have to have very, skilled timing entries. I've laid out, again, for the last several quarters, many trade ideas on individual stocks, long and short, and they collectively have blown the market away, collectively have had probably a 70 to 80% success rate, meaning hitting price targets, at least one or more, all of them before the suggested stop based on a reasonable R ratio. So that's, again, pretty much the only way to profit and flourish in a sideways market. Now, what I want to say is, if we get a breakout, that's particularly to the downside, is what I'm looking for, because again, the charts, I'd have to see more sectors and key stocks setting up bullish, projecting multi-month gains, high double-digit gains, to have me buy in aggressively on the long side. So what I'm getting at is that there will be a time, I believe soon, whether it's on the long or short side, I think it's going to happen on the short side, where the markets break out of that trading range. If it is to the downside, based on the charts and my projections, it should be a very quick, swift move. And that's when that's when it gets easy, because the market then tends to move very fast. The VIX explodes. You got to be Johnny on the spot, even with your index trades, but you can make a lot of money in short order simply going with an index ETF, shorting or the NASDAQ 100 futures or QQQ or any of those leverage ETFs if the time's right. Stay away from the leverage ETFs when something's in a trading range. I've mentioned that repeatedly. That goes right now for SQQQ, TQQQ is a swing position. You're going to lose to that decay that I've talked about and others have. But if we do get a breakout and it's a quick unidirectional move, then the leverage ETFs can actually outperform and do better than the 2 or 3 time leverage they use. So if you don't know what I'm talking about, that's what I was recently referring on that silver short trade. But again, now silver's grinding around. Now it's not a good time to be in CSL or ACQ, the leverage long or shorts. If you're going to trade, either sit tight, wait for the next setup, or be in just the one-time non-leverage SLV, which is a silver ETF, or silver futures, if that's your thing. Amazon still on check marks, divergent high, breakdown, check, 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 check. Nothing but check marks on Amazon. Just wanted to point that out. And it's below my key 211 support there as well. So there's another one that the market's not going to go too far without Amazon participating. Meta has been noisy lately. By noisy, I mean, we had that divergent high, clear sell signal there, check mark, below the 200s, back tested the 200s, rallied into earnings. Little birdies must have been whispering, obviously that's insider trading, that they were going to beat earnings. So you saw a sharp pre-earnings rally. That's unusual. That usually only happens if there's a leak. Insider trading, you can see the vigor of the buying right before earnings. But it took us back to the 200s, 200 exponential and simple. Then they reported blowout quarter, shot the stock up, but then they did nothing but sell it since. Now, where we're at, again, it's to be determined because we're splitting the crosshairs right now between the 200 simple and the 200 exponential, the red line. And so they sold it pretty aggressively. If you're a glass half full guy or gal, you say, okay, well, good. That's a back test of the 200s. We took them out. I can buy the 200s and set a stop somewhat below, and the stock's going to new highs. If you believe that, I can tell you it's an objective trade. But if you're a glass half empty guy or gal, you say, look, they sold the crap out of earnings. We're on the 200s. You want to wait to see the 200s clearly lost again. Once the 200s get lost again, just like here, we came up, back tested them. Once they were clearly lost, the sellers stepped in, said, okay, Meta can't hold. Once the 200s were lost here. And so that's it. So I think another failure at the 200s, especially after this, because what happens here, to speak now from supply demand dynamics, technical analysis, reading the chart, this isn't my opinion. I can tell you with a pretty good degree of certainty. In fact, that blew out a lot of short sellers, because if you were short because Meta was under the 200s for that reason, well, it blew away way past the 200s. So it cleared out a lot of short interest. Then it went back down there. It just helps clear the way for a bigger fall when you clear out a lot of short interest, because you don't have those shorts who are going to cover and take profits on the way down. So any stock, you never want to be heavily short, or even short a stock that has a high short interest, because there's always a risk of blowing out. I like to short stocks no one else wants to short, because there's that very little, if any, short interest, and it clears the way for a big fall. All right, moving on. Put the lines back on that chart. Broadcom coming up on March 4th, so about a few weeks left. And it needs to, you have a red question mark, because I need to see Broadcom take out the purple uptrend line, as well as the intersecting. You can't see it there. The red line, which is below it, is exactly on that trend line now. That's the 200-day simple moving average. Oh, no, it's coming in perfectly with the 200. The red's the 200 exponential, and the blue's the simple, and they come in together right there. And that's also the recent lows where they tested and they bought it. Surprise, surprise, right? First pullback. It's exactly what I'm calling for Alphabet. Even if it's a great bull market and we're going to have a good year in 2026 in the stock market, these stocks will always come back in, even in the strongest of bull markets, when they get too far away from their 200s, just to check them. It's kind of mean reversion. That was a 26% drop, and they bought exactly where you would expect. The buyers stepped in and bought the 200s, right? And that's what I think Alphabet it's ready to do. However, if the 200s go, that's going to be bearish. All right, 200s went here. The stock fell in very short order in about less than 2 weeks, dropped another 25% once the 200s were taken out. And since then, it's been in a raging bull market. It was under them there. That was well into the double-digit drop. Took them all back there. And every single instance it pulled back, except when it broke, of course, they bought the 200s. And then once it recovered, that was your chance to buy. and so was that. But now if they go, I think it's going to be more like this right here. When it took out the 200s, it had 26% downside. Okay, so that's it. Remember, they're within about a 3-week window reporting, so kind of take it with a grain of salt. Just know that, net bullish when you're above them. It's also been struggling with the 50-day recently, this yellow line here. You can see multiple rejections. It lost the 50s right here, that yellow trend, a moving average line, and it's currently testing that. So Tesla, big divergent eye right there, sell signal 1, check mark. That it's a green question, supposed to be a check mark because it was red before. Then the trend line break, back test, moving down. Again, this is just easy trading lately. The machines and humans alike are just buying these moving averages, guys. Tesla hit the 200-day, perfect bounce right off it, back to the 50. But we're in a near-term downtrend. A downtrend is simply defined as a series of lower lows and lower highs, right? And so that's what it is. This was within a bigger uptrend, right? Let's recognize it for what it is. This is the larger uptrend. Again, you can define trends on different time frames. Tesla's been walking up. But this is your previous major reaction low. So if we take that out, traders are going to recognize that. The pivot low is taken out, that pivot low, and the 200s in one fell swoop. It's going to be night-night for Tesla, in my opinion. That means lights out. Okay, Alphabet, we already covered the other share class. ASML. Again, I'm out of the Mag 8. The rest don't matter to me. They matter, but not as much. Costco, we've had a heck of a run in these, the defensive sector. I told you a couple months back, that was one of the best looking sectors in the S&P 500. They had a nice run. Costco has run back to this resistance level. It's more of a resistance zone with negative divergence. So that's most likely it for Costco right now. I don't see enough to short it at this moment, but I do think the run's over. And it also appears like a stock that's most likely peaked. I think a case can be made. Need a little more work to be done. That was a high, another high. If it reverses here, you have a low here, a low there, then that is the start of a new downtrend. And then boom, there's a primary, very, very significant long-term uptrend line. That trend line comes back all the way from, where did it come from? Where did you come from, Costco trend line? Oh gosh, rolling back years here. Look at this, 2017. All right, so let me get back to that daily chart. So you can see here, lose the 200s, lose that previous reaction low, the trend line, and then Costco should fall. And it's a big one, it's about the 11th, I think, largest holding, give or take, in the NASDAQ 100. Also, I believe, a big component of the S&P 500. And the semis have just been whippy as hell lately. XSD is the closest thing to a well-balanced index. SOXX was the first to market, goes back to the 90s, the Philex SOX semiconductor sector index. And then I'll trade SOXX, the ETF that tracks that. However, and I've done this for you, it's much less diversified. It's you're getting a distorted view, just like with the NASDAQ 100, giving you a distorted view of the stock market overall. SOXX has only 30 holdings. The top 10 alone make up 56% of the weightings. NVIDIA, and again, I did this on January 5th, so a little over a month ago. NVIDIA was 8%, AMD was 7.5%, so round that up to 8%. Micron. So you can see just a handful skew that one. It's a similar technical posture, but XSD, which is a SPDR's S&P and semiconductor, much more diversified. 43 holdings total, and if you add up the top 10, they only equal 29%, so a lot less. So more balanced view of what the semiconductor sector looks like. I'm going to tweak this trend line now. Let me I'll leave that minor one on there. So the way I had it drawn, we had a little violation here, a breakdown that I highlighted recently. But if you look at this candle right here, let me turn off the lines. You can see that. See that little skinny part, the wick that kissed that 200-day exponential right there. I was cutting that off before. I always say trend line drawing is an art, not a science. But I'm going to include it now. Why did I do that? Because we have a reaction low here that I need to capture right there. And so that is now the trend line to watch. Set a price alert, and that would and that will kind of trigger a sell signal in the semis. And again, the semis, for a real good old-fashioned correction or even a start of a new bear market, you're going to have to see the semis buckle. So, very important sector. Kind of what I call the canary in the coal mine for the tech sector, and the tech sector by far being the largest sector in the stock market, both the S&P and NASDAQ 100. Okay, let's talk crypto. Crypto's been all over the news lately. A lot of movement. The strategy trade. Rarely do I. Occasionally, I will send out revisions to my price targets on the official trades I give you guys. But even more rarely will I modify the same target twice. So before I left town, I want to let you know that strategy, I had to lower that first target, make it a zone, because we're at resistance that it's not, I missed it, but, again, it was common. It was more so due to this. So I'm going to zoom in here. Before I zoom in, let me recap again. If you're new to the site, this is crypto, actual crypto, BTC. You can trade this on the this Paxos exchange. And so I'm using this chart, because the futures, and I do follow and trade BRR, the Bitcoin futures. You can use the little one, the mini contract is, what is it? Oh gosh, give me a minute. There's a mini contract for it. It's much smaller because the Bitcoin BRR is a pretty big contract, volumes, dollar size. Anywho, there was a divergent high, divergent low, bullish falling wedge. These are the big trends, very clearly identified. Crypto trades just so well to the technicals, at least my kind of analysis. And these are the big trends. And we put in this divergent high, and then we broke down. Then we broke the secondary trend line. These were and still are all my targets. I still maintain that we're going here. And we tried to catch along at the first drop to 73,500, but then it broke. So then I said recently, look, okay, we were, for all the reasons, there was minor support here. You had a reaction low there, a little spike, but you also have a lot right in there. And we got to bounce off that level. It was extreme low oversold, for all the reasons that I stated, trade a bounce. However, and this is where I modified the target on strategy, because strategy, as you guys know, is basically a leveraged play on Bitcoin. So I'm going to pull this in a little bit here. Let me grab my, okay, down here. Let's go a little closer. Okay, so this is at 73,500. I know it says 73,497.22. We'll call it resistance. And you know me, I always say you want to always sell, because a lot of eyes are going to be on a big, well-defined level. You want to sell a little shy. We effectively hit it based on that strategy. Again, we came a little shy, which is where I expected. And that's where you're going to get a reaction. That was, remember, it was just because we went right through it doesn't mean it wasn't good support. I think it was very good support. This is what we call momentum-fueled overshoot. There was also, if you read the headlines I read yesterday, there was a massive South Korean crypto exchange, one of the biggest out there, and they did a huge snafu. If you read about it, they were supposed to give away a total, like they were giving away in a contest, like what in US dollars was like $5-10. I think the biggest prize was going to be $150, and they ended up giving away like I forget how many. It's billions. They gave away billions in Bitcoin that some idiot keyed in instead of South Korean won or whatever their currency is. I forget that, which is much larger. They keyed it in Bitcoins. They gave away more Bitcoins than they even had, and they got most of them back. But anyways, a lot of people that got those Bitcoins, we're talking billions with a B, dollars worth of Bitcoins, started selling them. And they said that helped exacerbate that crash last week. So that was interesting. I didn't know that was happening until read about it last night. Anywho, but that's it. So look, it's a bounce back to resistance. And unless that's recovered, we're not going to go bounce to these two potential targets. What's going to happen is, and I'm starting to think that we may just go down there. There wasn't a lot in this chart really for a reversal. It was a reflexive bounce trade. Remember, even in strategy, I wasn't calling for new highs. I was calling for a bear market bounce, bear market rally. And so that's it. And that's, as I said that day, I made sure to get that out to you before I left. We were at resistance in Bitcoin. So therefore, when I looked at strategy, MSTR, I'm going to get to reply. I said, based on this 60-minute chart, you can see it very well. I initially gave you a bounce target zone here because you had a lot of big resistance right there, formed now which is now big support, and a couple reactions there. But then this is what I saw, and that's a lot of reactions. And so far, boom. So that would have allowed you to exit, and then Mike asked me, and I saw it today because I was out of town. Let's go to that question. Go back to the site, go to home, would have been the last one right here. And can you give, what's your plan for an objective buyback? Let me answer this because hopefully others caught that trade. It's still very profitable, but again, that may be it. We may see T1 may be all we get out of that. If and when Bitcoin can solidly punch back above that 73,500 resistance, that would be bullish in my opinion and sharply increase the odds that MicroStrategy will hit the upper targets. So that's first and foremost. That's just hard stop. That's easy. You got to break that level. If you break it, I do believe you'll go up to, solidly break it, not a little punch through an intraday reversal or a one-day pop. Then we're going to go up to the next targets. Also, a solid pop above that first target zone on strategy would help too, but strategy is only going to go so far without Bitcoin regaining 73,500, right? Additionally, I don't plan to buy any pullbacks at this time unless it does. So, you know me, there's two objective ways that I will enter or add on to a long position. Number one is a break above resistance. Number two is a pullback to support. But I don't see any support. Again, go back to that Bitcoin chart. We just had a rally back. We overshot, momentum fueled overshoot, rallied back to and hit. And, well, I guess the only support would be the recent lows. Yeah, I should. Yeah, I'll add that there. And yes, you can take a shot there. It's subjective. They might come in and buy that low. You want to step in a little bit before the actual low. And what is that number? I'll give it to you, crosshairs. 59,700 something. The screen's cutting off. Move that over. Do it again. 59,900, right? That was a recent low. So if the crypto heads come in and buy that on or around there, you could have another bounce up. Otherwise, we're probably going to go down and continue down to my next longer term target, which I've maintained since this high was put in pretty much, 48,671. At that point, if we get something like maybe positive divergence, I really like to see on the daily chart here, other indications to step in there, that's when I would be getting bullish again on Bitcoin. So either here, to answer that question, buyback point, at which point you'll be stopped out of strategy because strategy is going to go at a lot lower, or break above there. And then that's target 1 and max target 2 right there. Okay, as I wrap this video up, I'm not going to get too much in the weeds because if I start going over individual stocks, there's just so many. And again, and I did get a reply. Thank you. I thumbs up to you. Somebody did reply to my question. Hey, would you like to see, would you like for me to continue to highlight a lot of individual stocks when I'm bullish or bearish a sector? So you can, go long the most bullish stocks versus the sector ETF, or short the most bearish stocks versus shorting the sector ETF. And they said that, well, at least one person said yes, so I'll continue to do it. And I'll do it because I do it. That's what this site's all about. I share what I see and what I do, give you my 2 cents. These are just trade ideas. You do it, you do you, I'll do me. But I'm going to share what I see. And I know a lot of times that's, contrary to what most people want to do. And I think the majority of the trade ideas here aren't followed, because they're very contrarian. Like when we were shorting the software stocks 3-4 months ago when they were peaking because they were at all-time highs and they looked as bullish as the S&P 500 does to most people right now. And that's when nobody wants to short it. Everyone wants to buy it. And then, of course, the headlines in the last week, everyone now wants to short the software stocks because they're realizing that they're in a bear market and, AI is going to ruin them and they're gone for good, blah, blah, blah. All right, so the VIX. This is spot VIX. VIX is offering an objective long entry. Here it's trend line support. Nice, clean. That's a super well-defined trend line. This is a 60-minute chart I'm on, by the way. And this is not by mere coincidence. How'd I start the video? The NASDAQ 100 and the S&P 500 at resistance, and a lot of key stocks at resistance. Remember, the VIX is like a mirrored. Now, it's a different level. I had this. This is on an uptrend line right here, but it's well-defined. And, you can take a shot at the VIX with a tight stop below. And again, you use whatever you use. I like VIX futures. They change, they roll. You got to roll them all the time. You have to know all the nuances on trading VIX futures, the expiration dates and the different, roll dates, all that good stuff. Or you can use a VIX track in ETN. I'll get to that in a second. VXY is one of them. But that's it. And remember, the VIX has what I call woken up. Put in a divergent low, just like it put in a divergent low here, followed by 80% and ultimately 100% pop. We were the same thing. I was highlighting that. Put in a divergent low there, pop, but that divergence got bigger, bigger, bigger. Ended with that divergent low, breakout of that bullish falling wedge. And so far off this divergent low, Mr. VIX has rallied about 72% or so. This is what it looks like on a daily chart. And again, it's what I call waking up. The VIX goes to sleep, comes down, volatility sold, comes out in a trading range, but you can see off these divergent lows, and I've highlighted each and every one of them the last couple of years, these rallies have ranged from the biggest one right here was about, in very short order, a 530% pop in the VIX. This divergent low, I'm going to measure from where the level started to the high. That was about 383. I believe that was a price target we had on both, one or both of these targets for these back then. They were hit, final targets. That one was the previous one. I just showed it to you on the 60-minute chart. Posted an entry VIX as a trade idea on September 12th. That's right here, beginning of September. Boom. So we got in, hit those. Those are all targets. So they're the same. You can see my chart here. These are the levels. This is a big level. This level's been tested twice. It's very much a near-term target, but we've already checked it twice. And again, so if the markets break down and if they lose their 200s, we're probably going to punch above those levels. That would be my guess. A break, a tag of that level. Here's what I'm going to tell you. The tag of just another run up from where we're at now. Let me just measure it for you. That's 58% run, 59, almost 60 in the VIX, is probably going to coincide with, remember, the VIX tracks the S&P 500. Even though I like to trade the NASDAQ at times. A pullback to the bottom of the range right there, which is only a 6%, no, from where we're at right now, to come to the bottom of the range, which is also comes in perfectly with the 200-day exponential moving average. See the red line below there? That's only a 5.5% drop in the S&P. But I will put good money on the fact that that will give you probably take the VIX up to this level, 55%, a 10-time multiple on your returns. Now that cuts both ways, guys, risk and return. So you can take a smaller position. Of course, I can be wrong, and if I'm wrong and the VIX and the S&P breaks to new highs and keeps going, we're going to drop down. And if I look at this, we're just, we're not far off the bottom of the trading range, the multi-year, when you look at the long-term chart of the VIX. So this is where in recent years, this is the floor on the VIX. So this is when I like buying volatility and I like selling volatility when we're at the extreme highs. You got to be really quick on the reversals off the highs. So there it is. So it's a trade idea. And then, of course, let me just continue on what I was just saying here. So I think a move, should the S&P fall to the bottom of its trading range, that's probably going to take, give or take, I'm just guesstimating, a move up to here, but a break below it would pop us way up here. So, the markets are asleep now. I say this, I do these long-winded videos because, Randy, I'm getting bored of hearing the markets and telling about the trading range, October 10th lows. All I'm going to tell you is this is, a few times a year, sometimes I wait years between and can make these monster trades on the VIX that can really make your year, especially if you engage it. There are times if I get enough signals, I'll engage it pretty aggressively. I don't know. My aggressiveness is going to be different from yours, but you can make explosive gains in short order. You got it. Your timing's got to be right. You got to recognize when you're wrong. If something else happens, when they get out, where to use your stops. That is only something, if you've traded for a while. And at the end of the day, if you haven't traded for a while, if you don't have a lot of experience, either stay away from the VIX or just put play money in it, paper trade it. Play money a small enough amount that, you're willing to lose if you went to Vegas. I call it Vegas money. Whatever you put in your pocket and go, donate to the slot machines. All right, so that's it. And so, again, the potential, these were just the last couple corrections we've had in the last couple of years, 2024 and 2025. So if we break the trading ranges, we go down to my next targets, especially if we take out T2 that I've given you on the daily chart of QQQ, which I think is quite likely. I do. And I'm still maintaining those long-term downside targets on the weekly chart. Yeah, we could blow on right on through here, ultimately. And that's, look where we went back here in 2020. That was COVID. And that's, when you look at my weekly chart, this is where just corrections end, this level. This is my since 2009, this is where all bull market corrections end. This was a bear market, that was COVID. So that was the end of a bear market. So was the end of the bear market in 2009, right? And so that's where, if you want to know what the upside potential for the VIX is, if I'm right, where the market might be going this year, that's it. So from these recent lows to that level there, that's 728%. And the thing about the VIX, again, I do these videos in advance, day after day. They get monotonous sometimes. I think to me, these are levels I need to just ingrain in my head, that if collectively I get all these sell signals and they fire at once, it tends to happen very fast. And if you just wait a day or two and you ask me right here, we're up here, and you ask me, Randy, is it a good time? I didn't buy the VIX. Should I get in now? First of all, I can't give individual investment advice, but I'm going to tell you I wouldn't do it. I like to be positioned ahead of these moves, because if you buy in and you get in at the wrong time after it's gotten high, it tends to fall just as fast. It collapses if the buyers come in, if the Fed comes in and rescues the market, or Trump tweets something out and he's going to ban short selling. You'll see that. That'll happen the next big drop. I guarantee you'll get tweets coming out and rumors that they're going to ban short selling. They did it back in the financial crisis. It didn't do shit. It made things worse. It was a temporary relief rally, and then things got worse. If I could sit here and talk all day long as why that's a colossal mistake for the stock market. And they'll do it because, the idiots up in Washington, they don't know the first thing about the financial markets. All right, guys, I'm going to stop the video here, get it out to you, and continue to hunt for some new trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.